The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Good morning and welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettler, along with Accunet Mortgages and Accunet Realty Advisors President Brian Wickert and licensed mortgage consultant David Wickert. As always, if you have a question or a comment, you can reach us directly on the Accunet Mortgage toll-free talk and text line. That number is 414-799-1620. What's on the agenda this morning besides March home sales numbers here for southeastern Wisconsin?
Well, we're going to start out with those March home sales, and inventory is as tight as the lid on a pickle jar, as I say in my most recent.
You are quite proud of that phrase.
I am. You know what? Because if anybody can come up with anything else that
I know
that's a great
exactly what
analogy.
you're saying, because you really got to lean into that.
You got to lean into that.
Yeah.
I mean, you know, you might have to tap it with the edge of a knife or a hammer or something like that. Anyway,
Okay, Grandma.
inventory is really tight. So we're going to tell you, kind of describe that in real terms, and then I think the most important segment or segments is going to be our top five.
Well,
What do you call it, David?
it's the segue from how tight things are. I was calling it the 5 ways to get the seller to say yes.
That's right. That's right. And we have a lot of our buyers with the Rock Solid pre-approvals are getting yes answers.
Yes.
We're at a fierce clip of accepted offers right now. So that's working. And then I want to talk about the jobs report, which came out on Friday. Very confusing.
Mixed signals.
Mixed signals. 4.5% was the headline unemployment rate, the lowest since 2007. I mean, think about that. 10 years, lowest in a decade. Yet, only 98,000 new jobs were created. All right. And then we've got some other interesting information on condos in particular. Let's dive in, though, with the numbers for the March home sales. This is courtesy of the Multiple Listing Service, which is owned by the Greater Milwaukee Association of Realtors, of which I am a card-carrying member because I am a licensed real estate broker after all. Single-family detached home sales were up. Are you ready? A whopping 1.6%.
Okay.
1,306 single-family homes sold. That was 21 more homes sold compared to March of last year, which I'm saying is great given the tight inventory.
Yeah.
Right?
Doesn't that
Because-
just mean that there's more buyers out there? It's the same supply, but more people want to buy it.
Well, hold your horses there. Maybe
Okay.
it's not the same supply. All right, so for the first 3 months of the year, the first quarter, real estate agents have sold 68 more homes in the entire 5-county area. So, you know, it's pretty much a tie from last year, first 3 months. Good news for home shoppers, though. There were 47 more homes listed for sale in the entire
yay.
5-county area this March. 2,400. So just think about that. I just told you 2,402 single-family detached homes were listed for sale in March compared to only 1,306 that sold. So our inventory, to your point, is increasing.
Okay.
So if you're out there shopping,
Yeah.
you know, there's a net 1,000 more homes, 1,100 more homes on the market now than there was in February.
Okay.
So that's good. All right. If we compare to 2015, however, if you go back 2 years, we're kind of missing 393 new listings. So it is getting tight. Now, median home sale price, which you know is not my favorite number,
Yes.
but I'm going to say it anyway, in March this year was $202,000. David, you got your master's
That was
degree.
across the 5-county metro area?
5-county metro area. Okay. Can you remind our listening audience of the difference between the median and the average?
Well, the average is you take all of it divided by the total number as opposed to the median, which is the exact middle one. So if there's 1,000, it's the 500th
Very
price.
nice. Very nice. Good. And then the mode, for those of you math geeks
So
out
one
there
that shows up the most?
That's right. The most frequently occurring price. Okay, so the median is the halfway point. Half the homes sold above that number, half sold below, $202,000. That's up a crazy 14% from 2 years ago and up 11% from March of 2016. Does that mean that your house is worth 20 grand more? Absolutely not. Because the MLS median price does not take into account things like square footage, number of bedrooms, number of bathrooms, all that kind of good stuff.
Okay.
Yeah.
I have a note down here, but what about the for sale by owner factor? You know, I think my gut tells me that in a hot market like this, there are more homes that are being sold by the owner. I know a couple of people who have done it, in recent months.
Okay.
Are you hearing any stories about that?
Not on the buyer's side, but if you,
Right.
sure, why not?
Well, I mean, it just gives confidence to the home sellers. Over on the condo side of things, you want to take a guess? I just told you that there were 1,306 single-family homes. How many condos do you think sold?
Half of that.
Okay, Steve, what do you want to go with?
I'm going to go with, less than half.
Less than half. Just as the rule of thumb, it's always about 5 to 1. 5 to 1 ratio.
Wow.
So only 272 condos. That's not abnormal.
Okay.
It's about a 5 to 1 ratio, single family to condos. That's 10 fewer than a year ago. Here's a shocker. I know these things and then I forget them. Median price, I just told you, on the single family was 202 for condos. David?
140.
How did you know that?
I swear I didn't look. I swear I didn't look.
143, 250. That's up 6% from a year ago. Here's one thing that's going to blow you away, is that the percentage of the sales price that people paid. This is, I just drilled down to Waukesha and Milwaukee County. The percentage that people paid of the original listing price in March. What do you think, Steve? 95%, 97%, or 99%?
97.
Dave?
I know the answer.
Okay,
so.
95%. And that is, you'd think with the multiple listings we're hearing, or multiple offers we're hearing about all the time. But this is another shocker. In January, buyers only paid 92% of the original purchase price.
I cannot believe
an
that.
8% discount. This is on single-family homes in Waukesha and Milwaukee County. Okay, when we come back, let's dip right into our 5 ways to get your offer accepted in a competitive bidding situation when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ. And if you have a question, you can reach us on the Accunet Mortgage talk and text line. That number is 414-799-1620.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
How did he become the only governor in American history to win a recall election? And what was it like to go toe-to-toe with Donald Trump on the presidential debate stage? Governor Scott Walker sits down with Jeff Wagner, and you can be there to see it live. It's Insight 2017 at the Country Springs Hotel in Pewaukee on Wednesday night, April 19th. Tickets are available now. You can go right there online and grab them up at WTMJ.com. Brian Wickert is with us. David Wickert is with us. It's the Accunet Mortgage and Realty Show on 620 WTMJ.
You bet. So let's dive into what I'm calling the 5 ways to get the seller to say yes. So let's hammer out the first 2 in this segment. And number 1 is the no sale of home contingency. I think you like to call this the wet blanket offer because it's like one iota above no offer at all.
I call it the kiss of death, David.
Why?
Well, because what seller, if you're sitting there and you're evaluating 5 offers,
right?
Who wants to have one that's contingent upon you selling your, crummy property? I don't know what your property is like. I don't know if you're insanely asking too much money for it, really, and I got to sit around and wait for that to happen?
Well, it's the seller. If you're the seller, you have to wait for your buyer's buyer.
Correct.
And it's, I think when you're the in-between person, it's also more stressful if you're trying to sell your house at the same time that you're trying to buy your next house.
For sure. Now, just an example, though, we'll report back on this when all the dust settles, but, we're doing this extreme home makeover thing for your cousin up in Stevens Point, and so we had gotten 2 offers, and one was really kind of low, about $10,000 below our asking price, not contingent on the sale of home. But then we got one that was actually a little above the asking price, and it was contingent on the sale of their home. In this case, we took the higher offer, even though it was contingent, and they sold their home in like a week.
Well, the other math that we do, and I think this is why it's important to hop on the phone with a loan consultant, it's, hey, let's do the math to figure out if you can hold on to your current home with, and so that you don't have to sell that before you go buy your next house, because, that might just relieve a little bit of stress there, and also then you don't have to include that sale of home contingency.
Well, and as
when
you
go to
know,
right.
because you helped me out on this transaction that just closed this last week,
Yeah.
in order to facilitate being able to buy the new home without selling the old home, we just closed a loan up in the Twin Cities where it was, husband and wife, but then the father co-signed as a non-occupying co-borrower
Right.
in order to make that possible, because they knew, if you think that the Milwaukee real estate market is hot, Minnesota, Twin Cities was
bananas.
actually just the featured in a Wall Street Journal article on how hot the market is. They knew there was no way they were going to get an accepted offer if they made it contingent on the sale of their home. All right, what's number two?
Thing number 2, no appraisal contingency. So what we always say is value is the thing that you're willing, the price that you're willing to buy at, and what the seller is willing to sell at. And so when you get an accepted offer, that's the value of the house. And yet, if you want, you can include that appraisal contingency where, hey, if it comes in $1 underneath what I said I'd buy this for, I have the right to renegotiate and...
Well, you only have the legal right to cancel the contract.
Well,
But
the
you have the
implied-
practical
yes.
thing is you can come back.
Correct. And so, I think what we emphasize is you had a conversation like this, I think last week or the week before, with buyers who are kind of nervous to maybe overpay for a property.
Well, I think you have like 2, maybe 3 different kinds of buyers.
Yep.
One are the people who are like, I don't want to buy this house unless I get this third-party validation that it's worth what I'm paying.
Yeah.
Now, you said you just explained to a buyer on an up north property
Yeah.
that, hey, the appraiser gets a copy of the offer, so
Right.
the appraiser knows what you have agreed to pay.
Yes.
And as long as there are comparable sales that support that, guess what? 95 times out of 100, we're going to get that answer back.
Yes.
But sometimes there just aren't comparable sales in the marketplace that support that higher price. And I think you get some other people who maybe have lost out on 5 or 6 homes.
Yes.
They get a little different perspective. Like, you know what? I don't care what anybody says.
I want to buy this house.
It's worth it to me. And let's come back. It's time for another break already.
Yeah, you bet.
But let's come back, and you had a great example of how you could skip putting in an appraisal contingency
Yes.
and just rely on your financing contingency instead. We'll tell you how that works when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
With the print industry constantly changing, Milwaukee Magazine is always looking for ways to stay fresh. Editor-in-Chief Carol Nixon talks to Colleen Bolin behind the scenes this week on WTMJ Conversations. That's coming up at 11:07 this morning. Right now, though, it's the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert. Some tips on how to get your seller to say yes to your offer.
Yeah, you bet. So number 1 was the no sale of home contingency. Number 2 was the no appraisal contingency. Can I do the math real quick on that?
Yes,
because, So what you can imply by removing your appraisal contingency but keeping your financing contingency, which, again, my personal recommendation is writing without a financing contingency is a little too naked. But anyway, if let's say in this example, if you write at $200,000 with 10% down, what you're including in that is, hey, I'm going to go get a mortgage for $180,000.
Okay, yep, 10% down, 20 grand. All right, so I'm going to get a mortgage for $180,000. Yep,
Yes.
that's so you include that.
Yes, and so what you can keep in the back of your mind is, let's say you're not a first-time home buyer and you got to put at least 5% down.
Mm-hmm.
So the question is, mortgage guys, we can only lend on the lesser of the appraised value or your purchase price.
Okay.
So how low could the home appraise for before you can't fulfill the
your
loan amount?
$180,000 loan.
Exactly.
Okay.
So the answer to this riddle is, so long as the home appraised for $189,500, you could still make a 5% down payment and bring the difference in cash.
I'm going to say that back to you a different way.
Okay.
So in other words, you could skip the appraisal contingency.
Yes.
And you're really saying, I'm good with buying this home for $200 as long as it appraises out for $189,500 higher.
Correct.
Or higher.
Correct.
Okay. Now, because if it came in at $188,000 Accunet would happily deny your loan for you because we couldn't approve your $180,000 loan anymore because you'd have less than 5% equity.
Yep.
And then, but the other flip side of that is you could change the standard language in the appraisal contingency, which says I can cancel this contract if the appraisal comes in $1 lower, and you could write in a separate, modified appraisal contingency that says I'll buy this house for $200 as long as it appraises for at least fill in the blank, 192.5. All right, what's your third thing?
Number 3, the accelerator clause. Hey, I'll buy your house for $200,000, but if you show me someone else wrote you an offer for $201, I will counter.
Yeah, I will automatically
offer
add
up $1,000 more than theirs, up to a maximum of $212.
$205. You fill in the blank. You're
Yes.
tipping your hand there as to the maximum price you'll pay.
Yes.
But sometimes
That's what
we're
it
seeing
takes.
that a lot.
Right.
All right.
And then number 4, a letter from the buyer. Hey, news this just in: buying and selling a house is emotional more than financial. So if you can include a nice letter that, hey, we can't wait to, raise our family in your home, and, we see ourselves being in this house for 20 years. People want to sell to, who they want to pass along the home that they've loved to people who are going to love their home the same.
That's right.
And then number 5, the rock solid pre-approval. When you've got an apples to apples, both are $200,000 offers. What the seller wants is to feel good about accepting yours. And the rock solid just reduces that risk.
I had coffee with a really successful real estate agent, John Gescheidmeyer, Remax, just got his own Remax franchise, and he literally said, hey, last month I had a seller sitting down presenting offers to his client, and it was one with a flimsy bank pre-approval from a major bank versus Accunet's rock solid, and he said, your pre-approval made the difference, and that's the offer that got accepted.
Cool.
I want to talk a little bit more about that after the news, though, in terms of how the whole financing contingency and what you can do there. So I'm going to make that 5B.
5.5?
Yeah, 5.5 when we come back after the news.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Brian Wickert and David Wickert are with us on this Sunday morning. It's the Accunet Mortgage and Realty Show on 620 WTMJ.
So, again, we're emphasizing that inventory is tight when you're out there shopping. David just covered our 5 best ideas for helping buyers get a winning offer, and we ended up with the financing contingency, and of course, the rock solid pre-approval, fully verified and guaranteed, we think is a tactical advantage for buyers, because we're really trying to help the buyers create certainty and confidence that the seller can rely on this buyer to actually follow through. And so our rock solid pre-approvals, of course, state right up front that we've not only verified your credit, which even a flimsy bank pre-approval does, but we've also documented and verified your income, and documented and verified where the down payment and closing costs are coming from, all 3 legs of the loan approval stool. And so you can rely on this. And in fact, our rock solid pre-approvals come with a guarantee that says if we can't make good on our pre-approval letter, we'll write a check for $1,000 American dollars to the seller, and we'll write another $1,000 check to the buyer because we must have made a mistake. Okay, so that's one thing. Now, the other thing that I wanted to say about the financing contingency, because you're going to write with a financing contingency, and I've done this a couple times now already this season. Hey, you're going to buy a $200,000 house. You really only want to put 5% down.
Yeah.
But you have the resources to put 10% down.
If you had to.
Right. So write the offer with the 10% down. Why? Because, again, when a seller's looking at 2 different offers, they're going to feel better about the offer that has 10% down.
Because you got wiggle room.
Yeah, versus 5%. Just like, hey, if you have the ability to put 20% down, but you really only want to put 5% down, write the offer with 20% down. That's, of course, kind of a magic number in real estate, because kind of everybody knows, especially the listing agent, that you don't need private mortgage insurance or government mortgage insurance if you put more than 20% down. I'm just telling you, David, that means something to home
it's the litmus
sellers.
test.
Yeah, it's like, oh, okay, they have a big down payment. 50% down is better than 20.
Sure.
Okay. Ultimately, the biggest down
cash
payment,
is better.
100%. Yeah, you knew where I was going with that, right? All right. So that's my little take. Is if you have the ability to, it doesn't obligate you, right? If you can go and still get the loan approved with 3% down. In fact, I've got buyers that are doing that. They wrote with 5, but we're financing them with 3% down. We just didn't want to scare them.
Because the financing contingency is just representing
What
this.
you can
This
use.
is if I can't get this, then I have the legal contractual right to not buy your house.
Right, to throw the red flag on the field and say, I'm backing out. Okay, so that's really, we got to put out another blog post on that.
It'll be up. We'll put it up this week.
Okay, sounds good.
The 5 ways.
All right, so this last Friday we had the jobs report come out, and there are 2 headlines for every jobs report. This was for the month of March, and the one that probably got the most press was, the unemployment rate dipped to 4.5%, the lowest since March 2007. You go, what? And yet only 98,000 new jobs were created.
Yeah.
Okay, so that's the reason why that can happen is it's 2 different surveys. The number of new jobs created comes from a survey of payroll companies, ADP, Paychecks, where we do our stuff. So it's an employer-based, employers reporting numbers to the Bureau of Labor Statistics. So that they actually revised down the number of new jobs created in January and February and said, hey, we only created 98,000. The expectation was for 175,000 new jobs to be created. So kind of a big letdown.
Yeah.
All right, but then the unemployment rate comes from a survey of 60,000 households. They're not talking to the employers, they're talking to the employees or prospective employees. That's where we get the 4.5% number from for the unemployment
Do
rate.
they call cell phones or is it just landlines?
That is, we should look that up.
Okay.
I bet it's just landlines.
Because I don't have a landline.
Me neither.
Okay.
I'm that cool. Okay, so they, according to that survey, now buckle your seatbelts. This just goes to show you that you shouldn't really believe anything 100%. According to that phone survey, the economy created, are you ready, 460,000 new jobs.
Wow.
Not 175, not 98, 400.
We employed the state of Wyoming last month.
Right.
Okay.
We hired and that's the number. The good news is that showed that we have 160 million people working in America.
Yeah.
That's good. That's the biggest number in a long time. The labor participation rate was 63%.
Good.
All right, David, you're going to tell us what that did to mortgage rates when we come back from this next break.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ. If you have a question, you can reach us on the Accunet Mortgage talk and text line at 414-799-1620.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Tomorrow at 9:10 is your next chance to follow the Brewers. You can tune in Monday morning to Jeff Wagner at 9:10 and listen for your chance to win a 4-pack of tickets to see the Brewers take on the Cardinals later this month and qualify to follow the Brewers down in Chicago this May. Follow the Brewers, sponsored by West Bend, the Silver Lining, Noodles and Company, and the home of the Brewers, 620 WTMJ. We're with Brian Wickert and David Wickert on this Sunday morning here on the Accunet Mortgage and Realty Show.
You bet. So the rate roundup with the jobs report coming out on Friday, Accunet ended the week. Are you ready? With 25% equity and all the other right stuff on a $200,000 loan, Accunet could deliver 3.99, that beautiful 3 handle, 3.99% on a 30-year fix. The APR is 4.02. That's with a regular closing cost of $1,100. No paper shuffling fee, no Super Bowl fee, no nothing like that.
All right.
If you wanted to drop down and pay that loan off faster, save a little bit on interest, Accunet could offer a 15-year fixed at 3.25%. That would cost you 0.2 of a point. The APR is 3.33, and the total closing costs are $1,500. You know, what I like to say is we can line up a loan to any number of years that you want.
Oh, yeah. We haven't talked about that for a while.
If only because some people don't want to restart the clock. You know, if you are trying to save on the monthly cash flow, totally fine. But if you kind of want to just pay less interest and stay on the same path, we can. You want a 21-year mortgage?
We got
I can give that to
24, any number of years between 10 and 30.
You bet. All right, so you were going to jump into condos. Those...
No. You were going to say what about our zero down first-time homebuyer program?
Absolutely. So our example is on a $200,000 purchase. We can line up a 0% down option. The APR is 4.56, and kind of depending on the property tax bill, your payment is probably somewhere around $1,360.
Right. What are the property tax assumptions on that? $4,000?
Yes.
Okay. $4,000 for that, and that's only on Wisconsin properties. We don't have that zero down program with the 4.56 APR in Illinois.
Correct.
For anybody listening down there. Okay, so what was I going to talk about?
You were going to talk about condos. You got 2 phone calls this week.
Yeah. Okay, so I got 2 phone calls, and then I also want to follow up with that FHA story from last week.
Okay.
All right, so 2 phone calls this week where the buyers, one was on a condo that was listed for sale. So existing condo built in 2007, but I noticed in the listing it said the following words. Where did I copy that in there? Okay, I can't find it right now. But it was about, hey, new developer is here. I just found it. New developer has taken over the condo project. Will be building strength of the association and finishing the units.
Oh boy.
Okay, that means that condo project is not eligible for Fannie Mae 30-year fixed rate financing because all the units aren't built yet. So what this tells me is this is a project that started in 2007, 10 years ago.
And is still not done?
Correct. Because why? The developer went belly up.
Oh.
Right? And the bank foreclosed on the project. And so that hurts you when you're one of the buyers in there, right? It's like, hey, now I don't have a project where anybody can get what most people want, which is a 30-year fixed rate loan.
Correct.
Because Fannie Mae isn't sure that this project is going to be successful.
They call that project risk.
Correct. For good reason, because obviously the project failed.
Correct.
The first time around. So then the other thing that was kind of a red flag there was building the strength of the association. So this is one of the categories that determines whether you're an established condominium project or a new project, is whether or not the homeowners association is still in control of the developer. So, when a developer is building a condo project, they are the grand poobah,
yes,
and they're in charge of the homeowners association. When they're all done, they turn over the homeowners association to the owners, who then have to, maintain a budget and make sure they're collecting enough in fees to do future improvements and maintenance and all that good stuff. Let's finish up on this topic in our last segment when we come back from this last break in the show.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And David Wickert, as we continue our conversation on tips when it comes to condo buying.
Right. So when you're buying a condo, this is my other call this past week. The guy called up and said, hey, buying this condo, it's under construction. It's not going to be finished till August. But, I was told by XYZ that it's not eligible for Fannie Mae 30-year fixed rate financing. And I said, well, let me ask you a couple questions. When you buy in August, will there be any other units still under construction? The answer is yes. And that's like an automatic, you are not eligible for Fannie financing. And so what this is about 50 units. It's development with 50 units, and they're all side by side. 2, condo units per building.
Sure.
And so when he goes to buy in August, there's probably going to still be, 10 units or 5 buildings still with just dirt and nothing built.
Bulldozers out in front.
Correct. So that's not eligible for Fannie Mae financing. But we do have a portfolio bank product where the requirement is that the building has to be finished, 90% complete.
His building?
Yeah, his building.
Okay.
So the 2-unit building that he's in has to be 90% complete. Well, what that really means is that the unit next to him could be absent carpeting or cabinets, something like that.
Sure, but he's got an occupancy
Right,
permit.
He's got to have his occupancy and all done with the flooring in, the cabinets and everything. And then the other requirement is that 90% of the common areas, so like if there's a clubhouse and a tennis court and a pool and all this sort of stuff, has to also be complete.
The net has to be up on the tennis court?
Well, I think that would be okay. The net would fall under the 10%, of not complete. But luckily, in this case, there are no common elements.
Nice.
Okay, so just, just the grass and the...
Can I just emphasize again on condos that when you are buying a condo, you are buying into a family.
Yes.
And it's important to know if there are any crazy uncles in that family before you sign up, because you get to own the house and you get to own the future relationships with your neighbors because you're in it together.
Correct. And what I said to this gentleman about that is I kind of like a 50-unit condo association because it minimizes the chances of one crazy unit holder
running the show.
Or doing, getting on the board and doing stupid stuff, which we have seen.
It sands down the edges. Is that what you're saying?
Exactly. So again, when it comes to condos, I want to make one other point for any real estate agents out there who are listing condos. There's the light touch for condo documentation, and then there is the extra thorough set of documentation. And where is that demarcation line? It has to do with new construction versus established. Okay, so if you are 90% sold and closed, and the homeowners association is in the control of the owners, that's called an established condo project. You're eligible for Fannie Mae financing. And if the home buyer is putting at least 10% down, we can do what's called a limited review, which means very little documentation required other than the appraisal. But, what if you're listing a condo for sale in an established project like that and the buyer puts 5% down?
Oh, less than 10.
Less than 10. Anything less than 10. Then you're going to need a whole treasure trove of
budget bylaws, master
bylaws,
insurance,
all kinds of stuff. That's all gettable, but it's just going to take a little bit more time. And if I was a listing agent, and we're going to put something up in our next newsletter to real estate agents, and we got to put a blog out, or at least maybe a page on our website that says
how to do full reviews.
Yeah, here's what you should collect together, because why wouldn't you want to do that homework and have that ready rather than waiting until the end? So if you're buying a primary residence or a second home with 10% down, and you're not in Florida, because Florida still gets special treatment, like riskier.
Yes.
But if you're doing 10% down or more, then we should be able to get by with a limited condo review. If you have less than 10% down, or you're buying an investment property, you're going to get the full treatment, no matter what, in terms of, and frankly, this is stuff that if you were buying a condo, you should probably be looking at. Like,
hey, what's the health of this association?
Because exactly to your point, as I was saying to this fellow who's buying into the new condo, get on the board, because you're going to want to make sure that your association dues are adequate.
You don't want to be surprised that in 2 years' time they got to put new roofs on everybody's house.
Correct. So there's a whole extra layer of things to think about.
But I thought condos were easier, Dad.
Well, they are, because you don't have to mow the lawn or
shovel
the snow or repair the roof when it goes bad. But you got to make sure that you got the money in the association
to go do all those things on your behalf.
Correct. And if your fellows, this is what happened in Florida. When other people got delinquent, right, all these foreclosures happen on Florida condos.
Yes.
Well, you still have the maintenance on all 100 units, but you only have 75 people paying, right? So all of a sudden your association dues go up, and you have less people. So there's actually a 15% requirement. Only 15% of your fellow condo association owners can be delinquent on their association dues.
Because again, they're trying to measure the health of the whole project. Everybody who's in the family.
That's right. Are you pulling your weight? Hey, quick follow-up. Remember last week we had the FHA rock-solid pre-approval at the end of the year turned, oh my goodness, we may not be able to approve your loan. And it all was because the person's second job income went from steady Eddie to nothing. And that pushed their debt-to-income ratio up over the FHA maximum. And so by cleverly looking at that situation and saying, boy, you know what, if you pay off these 4 credit cards, $1,250 worth of credit cards, that got their debt-to-income ratio back down into the winner's circle. And we issued the commitment letter this week. So that is going to have a happy ending, and we just have to remember as practitioners, we need to tell people when they're that close to the line so that they know. Don't sneeze, don't spend a nickel.
Keep it all the same.
Or we could be over the edge. All right, so here's the summary of current market conditions. Inventory is really tight. Let's help you be the best version of you when you're out there shopping. Let us strategize with you and your real estate agent on how to put together the best possible offer, including, of course, your rock-solid pre-approval. Rates are low, and all you got to do to get started with your rock-solid pre-approval buyer, find out how much you can save. On a refinance, just click on the big old blue button at Accunet.com. ACCUNET.com. We'll see you back here next week, Steve.
Sounds good. We'll check in with Colleen Bolin next from the WTMJ 24-hour newsroom.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors and not WTMJ Radio or Scripps Media Incorporated.